Hello everyone, welcome into today's video. It is Friday, May 29th, the last trading day of May in the market, and we had some insane moves. Really, this whole week has had some really insane moves for certain stocks, a lot in the software, especially some of the fintech, even SoFi has been getting some names picked up. But today on Friday, we have the market, so S&P's up 0.22% on the day, NASDAQ up 0.36%. And as you can see, there is actually a lot of red out there on the day. There, for example, Nvidia's down 1.45%. We can see Google, Meta down, Amazon, and you can see plenty of red across the board. But there have been some stocks that have just been making some extreme moves, which to me just looks like, okay, this has to be rotation. You can see, like over here, if we go to more of the software names, especially Oracle up 10.8%, Palantir 9, ServiceNow 14%. So in today's video, I kind of want to just go through an overview of these. I want to point out some specific names, ones that I'm interested in or that are in my portfolio. We're going to go through the buys I did in the week, a little bit of a portfolio update, and what my plans are going forward. So starting off, let's go ahead and take a look at my favorite, Zeta. We'll start with this one because this one I've made so many videos on relative to other stocks. But this company, yeah, on the day up 13.4%. Insane move. And I did see that interview Amit did with the CEO. Really great interview. I recommend anybody who hasn't seen that and they're interested in the company, go watch that. It's on the Basis Points YouTube channel. That was a really good, insightful interview. And if anything, a lot of the points on there just farther grew my conviction for the stock. So Zeta currently right now 13.4%, $22.89 is what it closed out the day. And I'm going to be honest, I don't expect this to go back in the teens. The valuation whenever it was down in the 15-16 range was just, for lack of a better term, it was just ridiculous, like dirt cheap from everything I was looking at, which is why I was buying so heavy. And I'm glad I was the last couple of months just loading up as heavy as I could on Zeta and grew it into a pretty large position. I'm pretty happy with that. Honestly, I could see this on its way back up to 30 like that very soon. So Zeta on the 1 day 13%. If we look on the 5 days, with most of these games coming here, up 25%, and on the 1 month almost up 30% on a 1 month. So the stock has been doing extremely well. And yeah, it's just kind of insane moving, but when you have some of these high beta names, that's just what can happen. And honestly, I don't even think the stock is that expensive either for anybody who has not seen my projections on Zeta that I had in a base case having a fair value of 34 to 40, which I made a whole entire video I'll probably throw up somewhere on here where I go into this valuation and how I came to my numbers on this free cash flow side, using kind of what the company's already been projecting on their 2028 numbers. But regardless of that, yeah, still at a market cap of under $6 billion. The company's valuation is frankly still just a joke right now. So I will still probably be picking this one up because I don't believe the price will stay around this range forever. I think the price already, we can see it had that first step up, and I don't think it will be too long till it has the next step up. So I'm going to keep acquiring. Another SaaS name, we can look at Adobe, making a pretty big move as well today, up 7% on the 5-day 5 and on the month 7.5%. So Adobe making a bit of a comeback. And from what I saw, this comes off the back of some of the numbers with Snowflake, I believe, that's kind of hitting down some of the bearish points that were tied to the whole SaaS apocalypse narrative going around. Again, whether that's what is actually causing it or not, I'm not sure. Personally, when I'm looking at it, it just kind of looks like people starting to do a little bit of money rotation, or a lot of funds are doing money rotation. So go on that one. Another one I want to point out, I never really talk about this stock, but Crocs has been kind of sneaky. So this week it's up 8.8%. On the 1 month, up 15%. And year to date, up 37%. So this one, I believe my cost, I gotta double check. I believe my cost basis is about $100 on this one. This stock, I was purely buying more on a play, on a valuation play, not much on the company's actual mode or like huge growth. So this one starting to move, which is great. The valuation on this one is also one that was pretty cheap when I originally ran my numbers. Let me see what I had as a fair value. I believe the fair value I had ran was somewhere around the 160 range, a higher end being closer to 200, just because it's so variable, just because the multiple it's been given it's so low compared to historical averages and even other players in the same industry. But with that being said, I'm still fine just holding my position. I don't feel the need to add anymore. I'll probably just hold my position. If it starts to get closer to fair value, I wouldn't mind unloading this position at least a bit to transfer into some other better names. Or I should say some of these newer positions that I have a lot of promise from. Now, if we're staying on the SaaS, Salesforce also had a pretty big move as well. As we can see a lot of these sales or a lot of these SaaS stocks getting a lot of movement today. So 8.47 for that one. And then ServiceNow, Jesus Christ. So up $15 on the day, 14.38%, and up another 2.99% after hours, which is actually insane. A little bummed out on this one because if anyone's seen my other video, this is a position I started recently, this one in Salesforce. And my buy range, I was trying to have my buys under 125, which it's already exceeded that. Which that was with putting an additional margin of safety on top of my original valuation, if that makes sense, which I can just throw it up over here real quick, which I had right here 158 to 182 for a base case on their numbers. This is with a 15% discount rate. So this one, even though I had my buy range under 125, honestly, I'll probably still be buying it under 135 to 140. That still gives me a decent margin of safety. I had it at 125 because I expected my position to be built out more before it started climbing this fast, which it could always pull back. But I mean, look at the beginning of the week. It was still in the hundreds where I was still picking it up and ended the week near 130. So yeah, stocks very volatile. Like I've said in some other videos, the market sentiment can change so quick. But anyways, another one, Palantir, up 9.2%. Big move on the day for Palantir, which is great. This one, man, do I regret selling so much of my position. I sold most of my position, I believe, in the 130s. I got to see where I was selling most from. Probably the 130s to 140s. But man, every time I look at it, I think I only have 5 shares left in my portfolio. I'm like, man. Sometimes I know the valuation was looking extremely expensive when I did sell it, which is a lot of the reason why I did sell it. But yeah, lesson learned. That's just when you have these companies that come in and outperform quarter on quarter and quarter on quarter, and they just prove to have an extremely strong mode, and you have a special company like that. I think there's certain ones where I don't want to necessarily say ignore the valuation, but if you already got in at a low enough cost basis, there is a point where you just got to hold your shares and not cash out, because likely the compounding that this company is going to do is going to exceed most other stocks regardless. And yeah, that's just a lesson learned. Not much you can do there. And then obviously I was able to take the gains from that and roll into other stocks. So you can't complain too much. But it's always just like one of those things where you look back and you're like, man, I really had way more shares of that. And I let them go. Which actually another company, kind of the same situation there. But I'll get into that in a second. So Meta, we'll go ahead and move on to Meta real quick. So on the day it's down, but this week it actually did jump quite a bit. And this was on the back of some information coming out with Meta, which first, just full disclosure, this one's actually my largest position in my portfolio. So this one's the largest holding in my portfolio, the one I have the most conviction in. I fully believe this one's going to be the largest market cap in the world. And yeah, this was built on the back of some news coming out that they're basically starting a subscription service for a lot of their family of apps that will basically be another revenue stream for the company to bring in income besides from just the main advertising, is what they've been doing. So a subscription model on top of that, which I think will be really good and really beneficial, will make their revenue less cyclical. My thing is, I just need to see what the new features are on the actual family of apps that they're charging for, because I'm sure they could put something that people will be willing to pay, obviously, but I'm just personally curious on what are they going to add there that's going to make people go, okay, I need to get the subscription, or are people going to go, okay, I don't really see a need for it, I'm just going to stay on the free version. Which there's always going to be a certain amount of the population that's going to upgrade regardless of what it is. And with how big their user base is, over, what is it, in the last one, over 3 point something billion, like half the world's population on their apps, just a small percentage of that signing up is already going to be generating billions and billions of revenue a year. But obviously, if we can convert more people and a higher percentage of their users to actually using the subscription, that will be much, much better. And this is just great, a good catalyst for Meta. I saw another thing coming out where apparently some analysts or something were re-rating because they were saying that Meta could basically get into selling compute also, like AWS and how Google's doing and Microsoft Azure, which, yeah, but it's like we already knew that is the one thing, which is always kind of funny with these stocks. I swear to God, the amount of times where I hear maybe on like CNBC or some article that releases basically talking up a point of the stock or like some new thing that could make the stock start moving or improve the company, that I look at it and I'm like, they literally talked about this on the last conference call. I'm like, this has been information for months now. Like the last conference call, I think like two or three conference calls ago, Zuckerberg was already talking about if they overbuild on the amount of GPUs that they're spending on CapEx, they could always just sell the compute out to their customers because they have people basically asking them if that's something they offer. So this has already been there. So, but that's just a market. It can sometimes just be slow to recognize things, which is good for us as individual investors, because if we're able to sift through all the noise and sit through those conference calls, we're able to get this information before the whole street and all the institutions start catching on. And that's how we're able to really get positioned into these names before the big moves happen, which is always a great thing to have. So with all that rambling, let's go ahead and get into the fun part, which is going to be what I actually bought this week and my plans for next week. So we'll go ahead and jump over here. So buys for the week. Celsius, I bought $120 worth of Celsius, 4 shares at $30.06. Celsius, I'm still very bullish on the company. Right now, I still am picking up any shares as long as it's under $42 a share. Based on the projections I have run, I'm looking over here. Currently looking at around a 25% CAGR. That was based on when the stock was around $30.16. So around the same. So on the low end, a CAGR 26%. On a high end, 31%. Again, I had a whole video on this one where I basically went into the numbers of Celsius and the projections I ran. So check that out. I believe it was my last video where I was looking at 5 different stocks. This is one of the ones in there. You could just kind of skip around to the different sections and I show my entire valuation. But anyways, regardless of that, Celsius, 4 shares of that one. Not going to elaborate too much. great company, love the price it's at. ServiceNow, same thing. So I bought this one also on Tuesday, shorter week in the market because of Memorial Day. But I got 0.74 shares, so $75 worth at a price of $100.96. Again, like the other video, I'm buying this one in a 1-to-1 ratio with Salesforce. I personally believe both of them are going to do well, but I want to get exposure to both of them. ServiceNow is handling more of the back-end automation. You can think of more on the HR side, administrative side, payroll, more of the internal processes, making the companies run more efficiently. While Salesforce is more on that front-end customer-facing side to help the customers that they're doing business with accelerate their revenue, analyze the actual data coming in, and kind of conglomerate a lot of these segmented data workflow sections. For example, they might have, let's say, invoicing from their actual system. They might get leads from a website. Both of that information is relevant to have at a top line view whenever you're pulling up a customer. But without Salesforce, that's really hard to have everything very organized and really hard to analyze the data. You have your Salesforce sitting on top that kind of pulls all that data in and conglomerates it. That's a very simplified, easy way I can explain it without spending 30 minutes going through. But anyways, with that being said, Salesforce also, like I just said, 1-to-1 ratio, also $75 worth of Salesforce. With the moves that have been made this week, this might alter a bit just because with the valuation of Salesforce being way lower than ServiceNow, I might start buying Salesforce a little more heavy than ServiceNow, since ServiceNow is already hitting the upper range of where I wanted my buy target to be, while Salesforce I still have under 215 is where I want to pick it up, and currently it closed out the day, let's double check so I'm not wrong on this, at 191, so still decent leeway on that one. Anyways, so with that one, the allocation might change a bit, but we'll see how that goes. Now, SoFi still great company, also on basis points. A great interview with Anthony Noto was on there. So Amit did a interview with the CEO of SoFi. Great interview there, very insightful. Recommend if you are looking into the stock, make sure you watch that and get some information from that as well. So 5 shares at $15.97. The stock closed today around $18. My fair value was around 24, so I'm buying under that $25 range is where I'm still trying to pick up shares. And finally, 2 shares of Zeta at $19.50. I paid about $40 for those 2 shares. And like I've said before, I think the valuation is a joke valuation. The only reason I'm not buying it heavier is because I'm trying to allocate more of the money to the newer positions, whereas Zeta's already grown into probably my... Actually, after this move today, it might be getting close to my second largest position, because I got to double check, but it might have overtaken Amazon. Just because of the percent move it's been making over this past month, it might have overtaken Amazon. But regardless to say, it's a top 3 position in my portfolio right now, which is why I'm still acquiring, because I think it's really cheap, but I'm not acquiring as aggressively to kind of focus on these other positions. Now, finally, plans for next week and what I'm thinking. So obviously I'm still doing my weekly buys, $400, where I'm going to probably divvy up around the same, maybe change up just a bit, depending on how the valuations stand next week and how the price movements are. But one thing I've been really thinking a lot about that I think I will probably end up doing, which you'll see next week if I do, is I think I might fully sell out a position. So for anyone who's watched some of my older videos, you might know what position this is, because I have been selling it off slowly, but I'm thinking I might just dump the entire position. And it's not because I don't like the company. It's more of just because I think I can move the money and use it better in these other names that I just kind of went through right here on my buys. And I can shift the money over there. And I think my return's going to be greater. A greater risk reward, you can say. And I've already made a lot on this stock. which makes it easier to kind of just lock in my gains and kind of shift them over to new positions. So what company is that? ATI, Alhegany Technologies. I'm always terrible at pronouncing how this name is. But anyways, basically this company I invested back in March of 2020. They're very tied to the aerospace industry. They supply a lot of the raw material powder for some of the printing of aerospace parts, especially higher altitude ones, and a lot of military components as well. They have been doing very strong, especially with the war tensions that kind of brought them up as well. As you can see, my average cost on it is $7.08. I'm down to 25 shares left in my portfolio. I don't even know how many I had at the height because I've been selling it off 4 years. And this is kind of one of those things I was saying earlier where with some of those like companies that keep exceeding what you were thinking, you sometimes always look back and you're like, man, I shouldn't have sold as much as I did, because I sold a lot of these around $60. With $60 on an average cost of $7, obviously that's still great, but the stock is like $177 now, not over 2,400% gain. This is, although it's not my largest total gain in terms of like just total like dollar amount, it's my largest percent gain in my portfolio, and it's done me really well. And I always just wish I didn't sell so many whenever it was lower. And then I also wish when I was investing in this, I was making more money, because I was investing, I kid you not, that was back in 2020. So I was probably investing maybe $100 a month, maybe 200, maybe, I can't even remember what my deposits were back then, but like a full month, like it was not a lot. But that just goes to show you, starting early, you learn more about the stocks as you look into them more. So that's always great. It's also allows you to play with less money. So if you do make big mistakes, you're not losing a giant dollar amount. And then even if you do get it right back then, with the way compounding works, even on a small amount of capital, you can still make some great gains that can still be useful in the future. So that's why just right there, just focusing on investing early is just such a great thing, which is why when people always ask me in my personal life, I'm always like, start as early as you can investing if you're gonna do it. Like, there's no reason to wait. But regardless, this position gone up a ton, as you can see, 2,400% gain. I currently put in a stop loss at 175. Good for end of day Monday. Reason being, if there is a sell-off Monday and the price starts to plummet, that stop loss is just going to lock in right there at 175. And I'll be able to use that capital to go ahead and put into these other names that will likely start going down as well because of that. Or if it doesn't, and let's say the stock pushes like 180-ish or 181, I can just adjust and move my stop loss up. So I'm fine with losing $2 on 25 shares. So yeah, was that $2 on 25 shares? So I'm fine with missing out on $50 if it does go down. And I have no problem with that. I've already made a really big gain on the stock. So likely the way I'm going to allocate that, I'm probably going to take around $500 out, throw it to savings just to get ready for tax season for next year, which I have some losses that should offset it a bit, but just to be safe, I'm going to put 500 high interest savings account just to get that prepared. Then I'll likely put a portion into SoFi. I'm thinking around 1,000, probably around 1,000 into Celsius as well. I'm going to put a portion into Zeta, and I'm going to put a portion into Salesforce and ServiceNow as well. Probably in the same ratio like I've been doing with my other buys. So that's kind of the plan going forward. And before we end the video, let's go ahead and just look at that, because this stock really, truly has outperformed way more than I thought when I initially invested back in 2020. And you can kind of see, so where's 2020? Just to kind of show y'all where oh, that's on a 1 year. Even on a 1 year doing amazing, but let's see. Is 2020 farther than 5 years? Jesus Christ, man. Time flies. Okay. Here we go. March of 2020. These are where I was picking up most of my shares. And this was pretty scary picking up. So whenever there's a market crash now, it's so hard, at least for me personally, to get worried about buying heavy whenever there's like a market dip, because this one felt like as bad as it could get. Luckily, I didn't have a ton of money going into this. Again, I wasn't making as much, I wasn't investing as much, but I think that was probably for the best, because if I had the amount of money I had right now, who knows what I would have done if I never experienced a crash like that and it happened all at once and my portfolio was the size it was. I might have panic sold. But because it was a lower amount and I was investing a lower amount, I stayed disciplined. I just kept buying, and I averaged down. As you saw, my average price dropped into the sevens. So yeah, that's where I picked that up. And then obviously, 2022 was pretty much all down. Maybe not for this stock, but just in general, 2022 was a really, really poor year for the stock market. So just these bear markets, you can make so much money coming out. That's where I built most of my meta position in that 2022 crash. And they are just really good to go through, and especially going through early, just because you get a taste of it and it prepares you for the future, so you can just stay disciplined. But yeah, as you can see, stock did me really well. I'm happy with it, and I'm fine with just closing out my gains on this and moving it into my new positions that I think are going to be my future winners. So that's pretty much my recap for the day. And I just wanted to get this video out so I can just kind of go over what my plans are. And also, I just wanted to cover and talk about this because some of these moves were just, as you saw, insane on the day. So I just had to talk about it. But let me know what stocks y'all are holding. What's your biggest gainer on the day today? And if there's any other ones y'all want me to look at. So thanks for watching.